So hello, we're here at Holistic Investment, and I'm your host, Constantin Kogan. And it's my pleasure today to have another amazing guest, Matthew Le Merle, who's a co-founder of Fifth Era and managing partner in Keiretsu Capital. Hi, Matthew.
Hey, Constantin. Very good to be with you.
Amazing to be with you too, Matthew. So we know each other for some time already, and I know that in Fifth Era, where you're managing Blockchain Coinvestors, and you have amazing background, basically telling about that. It's world's leading blockchain venture fund of funds. And Keiretsu Capital is the most active early stage venture investors, backing almost 200 companies in a year. So that's impressive background as it is, like short, right? And before going into the interview, I want to throw a legal disclaimer. This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. So here we go. And first, as usual, I'm going to ask you about your personal journey, your story. How did you end up in crypto? You've written, I think already several books. You managing venture funds, fund of funds, a direct fund, and you bought a lot of crypto yourself. So tell us a little bit about your story.
Yeah, so thanks, Constantine. So Alison and I, my wife and I, are English. We grew up in the UK. We came to America 30 plus years ago, 35 years ago for business school, and we never went back. And most of that time we've been in Silicon Valley. Our first careers, we were management consultants in financial services and technology and in other verticals. And then along the way, we became board directors of large companies, and Alison became CFO of BGI BlackRock, which is the world's largest investment company. So we've always been in technology and financial services. And when we started doing early stage tech investing back about 20 plus years ago, our focus was internet and fintech. And so for us, investing in internet companies and cloud computing and networking, as well as in fintech, is what we've done for decades now. And so for us, it wasn't that much of a leap to begin to get interested in digital monies and digital assets. In fact, we already were interested in those areas years and years ago. I've also been a very active video game and virtual world investor. And of course, we have digital monies and digital exchanges and trading solutions and so on. And we've had those for 20 years in the video game industry. So broadly, we were sort of in the same place, but the specifics are Alison was on the board of Royal Bank of Scotland in 2013, chairing their technology committee, and they were asked by the Bank of England to have a point of view on Bitcoin. She did her own voyage of discovery, met a lot of people, got to know Brock Pierce and Bart and Brad Stevens, liked them a lot, and then agreed to chair the advisory board for Blockchain Capital. And beginning 2014, she's done that ever since. And we love them as a firm. We're investors in all of their funds, and they've invested in a lot of great companies. So that was the beginning. Honestly, Constantine, it took me a bit longer to get excited by the space. And there are some reasons for that, which we can talk about. But so that's the journey. We're internet and fintech investors. We got to know about Bitcoin back in 2013 seriously, and became investors in Blockchain Capital. And through that, then became more and more active in the following years.
So another question for you, Matthew. So do you own a lot of Bitcoin yourself?
Constantine, it's a really interesting question. I am absolutely paranoid about the issue of self-custody. And ever since we first got involved back in 2013 in looking very closely at Bitcoin and cryptocurrencies, the issue of custody has been very worrying to me. And Alice and I made a decision at the beginning that we would not have any direct custody. So even though we paid a little premium to do it, we became GBTC investors, grayscale investors. And today I work with people like SFOX, who have the most secure custody solutions so that I personally have no holdings in my own hands or name. I don't have any private keys for any assets. And it's because, in this day of SIM swapping and hijacking and scamming and other things, I just want to take no risk. So most of our investments are paper-based. It may seem strange, but we're equity investors in funds like Blockchain Capital. And so you can't be hacked. I mean, it's just the paper investment. When it comes to things like crypto exposure, I use third parties like GBTC or accounts that are very secure in places like SFOX. And I try as much as possible to eliminate any direct risk. And as I say, I don't have any self-custody of anything. So I know that people who are more technologically savvy than me feel secure and are doing distributed finance and self-custody, but I don't do it myself, and I just don't take that risk.
Got it. Thank you. No, that's perfect. And just so for the people who don't know, right, we're lucky in Bitbull Capital to have you as our advisors. That's also one of the amazing contributions you do. So I know you advise not a lot, but one of the leading firms in the crypto space, specifically in the investment field. And maybe before we even jump into your investment thesis, I will ask you a more personal question, because you create like this amazing bond, and quite exceptional. Right? You're probably the only couple that I know that is successfully, I would say, combining the two worlds, like the personal life and the business, right? So can you share maybe your advice on this? Like, how is it possible to also survive like having your partner as your love of your life and also a business partner?
Yeah. Well, it's an interesting question, Constantine. And for us, we both began with McKinsey in London as management consultants, working in the same firm. And consulting is an industry which is very project-based, and most people are doing multiple projects at any given time. So, certainly by the time you're a partner, you might have 3 or 5 projects going at once. So we started off as being people who had our own portfolios of activities, and we understood what each other was doing because we were doing essentially the same thing. And I think that that's one of the secrets over time. My wife works very hard. She travels a lot, but I'm very supportive and understanding of that because I do too. And we are fortunate that we have portfolios of activities, so we can somewhat manage our own time, and we can try and align our, to make sure we are together at times, and certainly bringing up our 5 children. That was very important. The overlap between what we do and what we do together is actually quite small. So the actual overlap is Blockchain Coinvestors, which is the venture funder fund focused on blockchain. And it's also our own family office, Fifth Era. Everything else is actually different. So Alison is today on the boards of Silicon Valley Bank and Fiserv and Calibra, which are great firms, and also is an advisor at Bitwise and Blockchain Capital. My focus, I'm also Fifth Era and the fund, but I am a Vice Chairman at SFOX, the crypto prime dealer. I'm a Chairman of Securitize in Europe, the STO company. And then, as you already mentioned, I'm an advisor at Bitbull and a couple of other places. So the bulk of what we do doesn't overlap. So I feel like we understand what each other's doing. We're supportive of what we're each doing. We find enough time to be together, but we don't actually do the same thing all the time.
So that's your secret sauce. No, that's impressive. I thank you for sharing that. So let's talk a little bit we're going to start from Fifth Era, if you don't mind, right? And then we're going to the Blockchain Coinvestors. So the Fifth Era, you mentioned that it's more you're running it as a family office, closer to the motto, right? And then there is a Blockchain Coinvestors. So before we go deeper into your portfolio, which, by the way, there are 13 unicorns there. quite impressive. Like it also shows your amazing due diligence and your, I would say, a combination of gut feeling and analysis, right? So you started as an angel investor, like, both you and your wife, and then you transitioned to family office, and now you have fund of funds and then a few other firms that you advise. So for any, I would say, investor or just starting their journey, right? What would you advise? Like just some basic things to understand as like, as a precursor, as a kind of like sharing of your wisdom. How would you manage the risk? How would you advise people to go into the deals, especially in such not easy field as crypto, where you need to have a lot of different expertises? So maybe you can say a few words about that.
Yes. And it's been the journey that we've been on ourselves, because when we started 20 years ago, we didn't know what early stage technology investing was. We didn't understand the dynamics, and it took a lot of learning along the way, and we lost money as well as made money. And, we had our fair share of failures too. We actually wrote a book about it, which if you ever Google my name, you'll find that book. And it was really Alison and my attempt to give that knowledge back to other people so they could benefit from not necessarily having to figure it out for themselves. Early stage investing is high risk investing, and the failure rates, even for VCs, but certainly for angels, are 60 and 70% total failure. And conversely, the average return is one of the highest in the world as an asset class. So the expected return is very good, but you have to be very diversified. And so if you're starting out, the challenge here is, if you have a little bit of money and you're going to get started in early stage investing, how do you get to be broadly diversified? And if you're also going to make if you're going to be making direct investments where you pick the companies and you put the money in, how do you make sure that your deal flow, the companies you're seeing, are the best that are out there? And it takes a while to make that equation work out. You need access. You need to be investing with the best investors. You don't want to invest very much in any deal. You need to be investing small amounts in each deal so you can be highly diversified. And if you do those things, you hope to get a great return. You also need to think about your investment thesis by vertical and by technology and by geography. You can't be investing globally in a direct investment way. It's very hard. And obviously, there's a lot of emerging technologies and areas of innovation. So you can be a healthcare investor, you can be a blockchain investor, you can be a digital money investor. There's many choices, and you have to figure out which is the right for you. I think another thing that is very important for people to decide early is, am I a long-term investor, or am I more of a trader and a speculator? And both fine. But, a long-term investor in technology, you're having to take a 5 to 10 year point of view. Whereas obviously, if you're a trader, you can be trading every day and trying to make money every day. But it's a different skill set. Mm-hmm. And Alison and I are better long-term investors than we are traders. And so we don't do a lot of trading. Mostly we invest for that sort of, I'd say it's mostly for the 5 to 10 year horizon. But I am also Vice Chairman of SFOX, which is the leading independent crypto prime dealer. And so I do associate very closely with the trading community as well. And that was why I got involved with BitBull, because BitBull is one of the leading funds of crypto hedge funds. And most of the crypto hedge funds are trading oriented. So going back to your question, if I was just beginning, well, firstly, you have to decide that you can afford to do this. You do need to be an accredited investor in America. You need to think through your investment thesis. You've got to figure out, am I investing for the long term, or am I trying to make money every day in the short term? Am I a trader? Am I a long-term investor? And then if you're going to be a long-term investor, you've got access to the best deals, the best investors, be broadly diversified. And that's what we've done. So I just want to be clear on that. Many of the unicorns that we have our money in, we got that access because we invested into the best investors, Blockchain Capital, Blockchain Ventures, Castle Island, people like this, DCG. It isn't that I went out and personally found every one of those deals. There's also another, and this is now becoming a long answer, I know, but there's also a investment horizon discussion, early stage, mid stage, late stage. We want to be early stage. If you want to be a late stage investor, you can buy secondary market positions of unicorns quite easily, as most of them are traded, not all of them. But that's not what we want. We want to be early stage investors, and that's much harder, to get early stage access into the best companies and teams.
No, it's a great answer, and I appreciate the depth of it, because essentially what you're saying, you have to be patient, you have to understand where you invest, and you have to figure out where is your deal flow. You have to partner with the best, and because you basically combine the efforts of due diligence, you now have, let's say, you have 3 great teams like DCG, Castle Islands, and Blockchain Capital, who are also helping you to due diligence, like from the financial perspective, technical perspective, from all different, like pairs of and lenses of eyes, where they understand like those things, and also you have different opinions, right? And I think you minimize risk like that, and gives you more rationale, like where to invest and and what stage. Now, also the early stage is better because yes, there is more risk, but there's also more, the upside is bigger. So that's another interesting investment thesis of yours there, where like some people are afraid, they want to minimize risk, but they have to understand that the later you come in, the less is your multiple, right? So those are impressive things, to consider. But so far, like as a family office, you basically invested in Bitfury, in Block One, Circle, Coinbase, Calibra, Kraken, and Ripple, even some of the not only crypto projects as Robinhood and Spotify and Zoom. So it's by itself, this portfolio is like close to like some big venture firms. So if you would help people to understand, like, how do you combine, basically being a family office and also having your fund of funds, and in a way, like, spread the baskets and different investments into the right direction, so that you also minimize your risks, your efforts, but you maximize your upside potential and all the great opportunities?
Yes, thanks for asking. So it's taken 20 years to try and figure it out. And I'm sure we still have a lot more to learn. And I already told you, we've had our fair share of failures. We've invested in a lot of companies, hundreds. So there is good news, and we're very happy with what we do, and we carry on doing it. So that's obviously an important statement in itself. But there have been times when it's been very tough, and good companies. I'll give you an example. We were the lead investors, and I was chairman of Telltale, which was the leader in episodic video games. Mm-hmm. And they created the games like Game of Thrones and Walking Dead, very popular video games. And we were so excited. The company was an emerging unicorn. I felt great. On paper, we'd made a lot of money. We did have partial liquidity event. We sold some of our shares, so it was good. But I got a call one Monday morning, and the company was saying that week it was going to go bankrupt. And it was a shock, and we lost a lot of money. So I don't want you just to think it's all good news. And for people who are investors on the line, you have to be eyes wide open. You have to do due diligence, and you're still going to lose as many times as you win, but hopefully you'll get some good investments in your own personal net. At this point, the way we think about it is we are Silicon Valley tech investors. So we are very long in technology. We are also have quite a bit of real estate investing that we do. And then we have a certain amount in the public equity markets. And most of that, I would say, is skewed towards tech companies like Amazon, Google, Microsoft, Apple, and so on. We don't have a lot of fixed income. So compared to a typical investor, we are overweight in technology, public and private, and we are underweight in fixed income. And my personal view for decades has been most people's optimum portfolio is much too much in fixed income. And the reason for that is because the data on technology and small cap real estate is not captured in the models that financial advisors, private banks, and so on run. So they will end up with a asset allocation which is actually suboptimal because they don't have any data on private investments in real estate and in technology. And so we feel like our portfolio is a better optimum portfolio because of the fact we are long in technology, and we have been for 20 years. And certainly the last 20 years is proving that to be true. Then we have a point of view on stages. So in terms of technology, early stage tech, you mentioned I'm a managing partner at Keiretsu Capital. We're the most active US angel group. And so we get some capital into early stage tech that way, but not in blockchain. And then in order to get blockchain exposure, we started investing in the best venture firms in the space, like Blockchain Capital, Fabric, Castle Island, and so on. And we ended up putting that into a vehicle, and that vehicle is Blockchain Coinvestors. So we have other investors that invest with us. And our goal for Blockchain Coinvestors is to have the largest possible portfolio of the emerging blockchain unicorns. And so by giving our money to the best VCs in Asia, North America, and Europe, we end up highly diversified by geography in blockchain companies that are being started, and we're typically equity investors in them. So this is the second thing. Now, mid-stage, our mid-stage strategy is primarily co-investing. So when a company is emerging out of the early stage, it's been backed by one of our VCs, and it needs more capital, then sometimes we want to participate in the round. And so last year, we did that 5 times with Coinbase, Ripple, Polkadot, Definity, and Filecoin. And I know a couple of those are tokenized projects. This year, we've already done it with Wire and Uphold, and we're about to do it in another case. So this is sort of like mid-stage investing. And then late-stage blockchain investing and technology investing, Alice and I sit down a couple of times a year, and we ask the question, are there any emerging unicorns that we would like, that we don't have any exposure to, that we'd like to be investors in? And when we come up with a couple of names, then I try and figure out how to get in. So in the last cycle, there were 3, Brex, Stripe, and Brave. And we've been looking for ways to invest in those companies as direct investors. So that's sort of from a technology point of view, early stage, mid-stage, late stage. In order to be diversified, we created Blockchain Coinvestors. So we also have Asian, North American, and European coverage. And because Alice and I are internet and fintech and blockchain investors, that tends to be our focus. So it is a complicated equation. When it came to crypto assets, I got involved in BitBull with you and Joe DiPasquale and so on, because I also wanted some exposure to crypto hedge funds, but I didn't know how to choose the best ones. And so I said I'd sooner back someone who I think does know how to figure that out, and that was Joe and Sarah at BitBull. I'd sooner back them and give them some money and let them figure it out. And we did the same at Bitwise, where Alison is an advisor. So I think that if you are, if this is your job, if you're a full-time technology or blockchain investor, you have to start figuring out how to get an edge. And it's a lot of work. But conversely, what you don't want to be is a fly-by investor on the periphery, right? Finding, teams and people to back that are going to struggle to really be the winners. Mm-hmm. And it's not, they may be great people working really hard, but to be a winning, fintech or blockchain business is actually, very few will be winners, and you've got to figure out how to get dollars into those winning companies.
Yeah, that's There's a lot of things like to digest in your answer, so I appreciate it. I hope like people will rewatch it like several times. But I because we don't have a lot of time to go like through your 20 years experience, so we're gonna move faster. And first, I want to remind the viewers that Matthew and Alison, they co-authored like several books. Like some of them were like business and tech oriented, some of them are more fictional. So we're going to start from the one that I've read personally, and the one that I like one of the first that I knew, that was Blockchain Competitive Advantage, right? Which actually helps people to understand whether you are like an entrepreneur, investor, or like any established company, what's in it for you, like when you apply blockchain, right? What's the advantage, like how to invest in it, like how to see it, like so maybe like just a brief summary of the book, like if you can accentuate some of the major points, like why people should read it.
Love to, Constantine, and some of them I've already said. We Alice and I write the books primarily to share our knowledge and to get reactions from other people. By having books out in the marketplace, people read them and then they give us input. And sometimes we get better access as well. We'll be introduced into opportunities in that way. So Blockchain Competitive Advantage was intended to be a book to explain not about the technology, not about blockchain, the technology, but about the reason why it's important in the transition that the world is passing through. And, Alice and I are not technology-first investors. We are use case-oriented in the way we think. So for us, the macro story is the world is transitioning to a digital age. And we're only halfway, if that, in that transition. The first half was about building the internet, connecting everyone, creating powerful devices and approaches for us to compute and store and share information and data. And we've done that, right? We have a global connected world and an internet, and TCP/IP was the underlying protocol that enabled much of this. The problem is it wasn't created to be a transactional platform. So the internet as such doesn't have any native digital money or digital assets embedded in TCP/IP and the protocols, frame relay or whatever you want to mention. They're not transactional protocols. They're communication protocols. And that means they're not secure. They're not trustworthy from a commerce and a transactional point of view. And so we do our commerce and our transactions off the internet, right? I buy something from you, you ask for a credit card, and it goes through a gateway and it goes out of the internet and into the payment rails and payment system that we have, and so on and so on. Well, we think the second half of this conversation, the next 15, 20 years, is going to be all about digitizing financial services, monies, assets, and everything that goes with that. And there's other things as well. It's also the life sciences revolution. It's the clean energy revolution. There's other things going on as well. But because finance and commerce and payments and investing are verticals across every industry, not investing. Well, even investing is actually, because we invest in every industry. So because they're horizontal, they go across every industry. And so we think that this is a huge change that's occurring, and we're living right in the middle of it. Yeah, and that book, Blockchain Competitive Advantage, details this out. The transition the world's passing through, the importance of digital money and assets, and then it talks a little bit about how to take advantage of that, including how to be an investor in that context.
You wrote also several other books, so I just want to remind, like, one of them is Fifth Era, and another is basically Build Your Fortune in the Fifth Era, like about angel investors, VC, and entrepreneurs. So there's the name of your family office is obviously Fifth Era, right? So can you help us to also understand the concept behind the Fifth Era? Maybe I feel like there is a little bit of metaphysical concept behind the doors as well.
Well, not so much as Singularity. I'm actually an advisor, a faculty member at Singularity. No, this is very simple. Everything I've just described is about us transitioning out of the industrial era, which is the fifth era of the world, the fourth era. Mm-hmm. We had hunter-gatherers, the agrarian, the mercantile, and then the industrial era. And you'll hear people talk about everything that we're going through today with technology and blockchain and distributed networks, cloud computing. It's a continuation of the industrial era. And Alice and I fundamentally disagree with that thought. And in fact, we think if you are a government official or a corporate executive or an investor, and if you think that the future is just a continuation of the last 200 years, you're missing the whole point. We're transitioning into a new era, and we don't know what to call it. We know that it's going to be a digital world, and that everything is going to be digitally driven and enabled. Obviously, the life sciences revolution is changing the very nature of plants and animals and maybe even human beings. Mm-hmm. So we don't know whether to call it the singularity or the Borg or something else, right? We're just going to call it the fifth era. But the point is, it's a new world where everything is enabled with technology, and it's enormously different. And so just to give you examples, in the industrial era, we believed in scale and efficiency, physical scale and efficiency. And most companies begin locally and they build to be regional, and one day they hope to be multinational. And we use the typical corporate structure and the public markets to create and fund those companies. We don't know if any of that's relevant in the future, right? Companies can begin global. They can use digital technologies to serve everyone in the world, so long as they're regulatory and there are no regulatory and political barriers. And it doesn't always make sense for them to be corporate structures. They could be networked projects and communities. And it may not make sense for them to be public at all. Maybe they should be private investments or tokenized communities. So the very notion of the corporation may be about to be changed, and the public market model of investing may be about to change in a dramatic way. So we just call it the fifth era. There is a free book, by the way. If anyone ever comes to fifthera.com or blockchaincoinvestors.com, there's a free book you can just download, and it tells you a little bit about that thesis. And it's something we believe in, which is why we did call our family office Fifth Era.
Yeah, perfect. I'm definitely going to share the link to make sure that people have access to it. So there is another book which I want to mention is A Second Chance, right? Which is was quite interesting to me because it describes basically this dystopian idea when everything is basically terrible. The world is driven by artificial intelligence, and like people are out of food. You know, there is mutations and everything. So, and all of a sudden, like there is there are certain aspects that people feel that there is a second chance and there is another perspective how they can view the reality. So tell me a little bit about the inspiration about the book, like, and how come like from almost like a so rational investor who's like, always like on point and calculating every step, you all of a sudden write a novel that is a dystopian novel, and that's interesting as well.
Yes, thanks, Constantin. Well, so I need to explain the backstory. The backstory is, as a kid, I read science fiction and fantasy, J.R. Tolkien, Robert Heinlein, Isaac Asimov, and so on. And I always planned to write a book. When I was like 13, 14, 15, I wanted to write a book. I never did. And in fact, I became an athlete and a rower and a rugby player. And on the rowing side, I continued to do that well into my 50s and competing in the US nationals and the world championships and things like this. And it took a lot of my time and energy, and I loved it. 2 and 3 hours most days, as well as work. And then I got injured, and suddenly I had spare capacity. If I felt I did. Instead of exercising a couple of hours a day, I felt like I had spare capacity, and I also wanted to do something with that time beyond just work. And at some point, I got re-engaged with that earlier thought of, well, why don't I finally write the book? And so I wrote one book. And then I said, well, this is so much fun. I'm going to write a second book. And then a third. And those were all business books. And by the time I'd had, with Alison, we'd co-written some successful business books, and you've mentioned their names. Then I had the confidence to write a sci-fi book. Okay, and that's second chance. And so I don't want to spend too much time on this, your precious time on this. But basically, we live in the positive scenario. Mm-hmm. You know, every day we're in Silicon Valley, and we are living in a world in which we believe that technology will solve and innovation will solve all of the world's problems. And we're working on that. We really are. And there's people working on pretty much every issue that you could raise. Medical, well-being, education, the unbanked. It's we're working on all of these things. But in our minds, the big collateral loser has been the environment. The Industrial Revolution has demonstrably improved the human condition globally. But without question, it's damaged the environment. And I just wanted to do a thought experiment where I put my mind into the world in which we don't solve that problem. And that's this book. So just imagine we don't solve the problem and the environment gets worse and worse and worse and the carrying capacity of the earth diminishes. What then happens? And I tried to write a novel of some young people born into the future and what it might be like. And that's Second Chance.
No, that's impressive. And it gives a little bit of transition to talk about your upcoming book, right? The Minister of Bitcoin, which also has a quite surprising narrative, like how, like I would say, an alternative view, who actually created Bitcoin and what went wrong. To me personally, the name actually has also some interesting, metaphorical types, connotations of the money is a belief system, just so that if you think about it logically, that why we believe in US dollar, it also has just because we believe in it as a system, but it's not backed up anymore by any goal or by anything, right? So Bitcoin is the next transition, but in your terms, I'm not saying it's a continuation, it's let's call it a quantum leap. And please tell us a little bit more, what is your new book about, the Minister of Bitcoin, and what's the idea behind it?
Well, so the genesis of this is that you couldn't imagine a better starting point for a film or a book than Bitcoin's genesis. Some unknown person or people sits down and creates a white paper, which then gets converted into reality and forms not just Bitcoin, a global distributed sovereignless way to transact and store money, but also a new technology wave. And we don't know who that person is.
Or a group of people.
And we know, or group of people, a man, a woman, a group of people, we don't know. And that is just a wonderful beginning to start again, a thought process, because you go back to 2008, and obviously the cypherpunks and the folks focused on digital monies and security and privacy and freedom of speech and other things had been working back in the 1980s and the 1990s and the zeros, but it all coalesced at this moment in time. And I wanted to just spin a yarn for people who are in the space and just would like to have some fun. So it's a novel, but it's a novel that connects the last 20 years of our lives. So, you and I and everyone listening to this webinar, we've lived in 20 years, remarkable years. At the beginning of the last 20 years, we had the rise of distributed terrorism with 9/11 and with many other acts that occurred. We had the movement and in America, it was the movement to create the Freedom Act and the movement to quickly move against the war on terrorism. We've had the rise of anonymous and freedom of speech movements like WikiLeaks and others. We've had the rise of distributed in that time frame. And this book, it's actually here. So this book, Ministry of Bitcoin, I don't know if you can see that. That's the problem with Zoom. There, I got it. So Ministry of Bitcoin, available everywhere, hardback, paperback. This book basically is a story of who was Satoshi Nakamoto, why was Bitcoin created, and then what went wrong. And I'm not going to tell you much more about what went wrong, but suffice to say, if you want answers, even if I made them up, if you want answers to a lot of the questions that the Bitcoin and the blockchain community wants answered, they're in the book. At least my answers to those questions are in this book, and I hope people have some fun with it.
Oh, I'm sure. See. That's intriguing. That's good. Yeah, like you've thrown some small bites of what people should expect, and then we're going to share a link, and I'm sure some people will be able to download. And maybe if you're going to be so kind, maybe we can throw some raffle, and when 100 comments, you can even sign the book personally for a person. Like maybe we'll.
Yeah, the signing is a bit complex in this digital world, but. Happy to do something with you, Constantine. I would also say that the serious narrative that's in the book is I also think we are seeing the polarization of people that believe in independence and freedom of speech and other things, and others who are less supportive of that notion. And I think there's tension around the world around this issue. And in a funny sort of a way, this book sort of tries to connect some dots, but it's definitely a conspiracy theory. And you don't necessarily have to believe everything that's in the book, that's for sure.
So the basic advice: apply critical thinking, right?
Yes.
So okay, one of the traditional thing I'm asking, like just to also elevate the mood, even though like it was great, like just general like the vibe and the dynamics of the interview. But I'm sure you came across some funny characters or situations which are, I would say, in our space are quite comic, or I would say unusual, right? So can you share one of the like funny stories that happened personally to you or Alice?
Well, I'll tell you a funny story. It's not really very funny. It's very tragic.
Oh, okay.
But it's a typical thing. It's an investor story. Mike Moritz of Sequoia, which is probably the most successful venture firm in the world, says he worries more about the deals he missed than the successes where he actually invested. It's the deals that the companies that turned out to be great successes that he turned down. Those are the ones that keep him up at night. And we had a funny situation because Alice and I were amongst the investor group that backed Dispatch Management, and the co-founders of that were Greg Kidd, who I'll talk about in a moment, and Linda Jenkinson. And it was a very interesting company. It was sort of like the Uber in the 90s. So it was basically a roll-up of the courier industry on a standardized technology platform. And we did IPO that company. Alison was on the board. It was a pretty successful outcome for everyone involved. Well, there was a young engineer working at that company, and his name was Jack Dorsey. And Greg Kidd decided to go off with Jack Dorsey, and they created first Twitter and then Square. And Alice and I didn't invest in those companies, even though we knew Greg, but we were doing other things and otherwise focused. Then, but we knew him, and Linda Jenkinson still is a very, very close family friend. Well, then a few years later, it turns out Greg got very involved in Ripple at the beginnings of Ripple and was one of the chief compliance and regulatory people helping Ripple at the beginning and an early investor. And one weekend he called us up and he said, "Hey, Alison and Matthew, I want you to come over to my home in Sausalito. We've got to talk about this new company I'm involved in." And we have 5 children, and we were pretty busy that weekend, and we had some issues we needed to sort out. And I said to Alison, "We can't go. We got to stay home." And so we missed that magical moment where we could have been investors right near the beginning of Ripple and XRP. And that's life. As early stage investors, you've got to be in the community. You've got to be putting it out there, meeting the key investors. And hopefully you'll back some good ones along the way, and we're happy with where we are. But you will also have these types of stories, the one that you were just this close to. And we have a number of those. I gave you the Ripple XRP story, but there are plenty of others as well. We still love Ripple. We still think, with a bit of luck, touch wood, there's going to be a good Ripple IPO ahead of us, and hopefully XRP is going to be used even more broadly than it is today. But obviously what you want always is to be an early investor in these types of opportunities. And so that's my story for you, Constantin.
That's also, I would say, educational, right? And I'm hoping that everyone who's hearing those stories, they were just probably going to take more efforts to be available to hear like those opportunities, not to be picky. Like, even though make due diligence, ask many questions as you need to understand and do all the critical analysis that you can, but still be open-minded, because the early stage, you never know, like it might be a unicorn. But the funny aspect of it, as you mentioned, because you actually got an allocation to Ripple, but later through the other fund, correct?
A couple of different ways. So our core strategy actually isn't to try and find the companies ourselves. So because we're I think actually Blockchain Capital, DCG, and maybe Pantera too are all investors in Ripple, and maybe there are others in our portfolio of VCs that we backed. So we're investors in Ripple in multiple ways, and then in addition, we did buy some Ripple through another company that Greg and we have backed called Link2. Mm-hmm. And Link2 is essentially Coinbase for emerging unicorns. So anyone can go to LINQTO in the App Store, download it, and you can buy some Ripple or some Uphold or some Coinbase right now.
We're talking equity, not coins, right?
Equity, yes. Yeah, well, yeah, anyone can buy XRP, but no, getting equity is always harder. And Link2 has come up with a very simple way. The problem is you've got to be an accredited investor. And that just, unfortunately, goes with, we haven't fully democratized technology investing in America. But it's getting easier, and I think over the next few years, I think the government will make it easier and easier for more and more people to be tech investors. It doesn't really make sense that all this wealth gets created in early stage tech, and most people are forced through their 401ks and IRAs and their fund managers to invest in bonds and fixed income and old public companies that maybe don't have the most compelling futures. So anyhow, Link2, like Robinhood and Coinbase and others, is beginning to make it easier. And Greg Kidd and we have backed that company. So that's one company we're definitely excited about.
Well, we're seeing more and more crowdfunding platforms like Republic, who are doing sort of hybrid models. They're trying to also engage some tokenomics and to assist. And there's $100 minimum, right? So I think there is a way to democratize it. And even though the Reg CF only has $1 million maximum to raise, there, as I understand right now, we're expecting the new legislation, hopefully, that's going to raise it to 5 million, and still we're going to have a lot of non-retail investor to participate in those offerings, which is going to somewhat democratize it. Also, one of the last questions I want to ask, because you've mentioned it several times already, the difference between the fixed income and the long-term investment, more of a tech startups, which has a slightly different risk reward ratio, right? And do you think the financial advisors are just just offering you the less risky portfolio just because of their goal of not losing money? That's the primary goal. Not just, even though you want to ask them, I want to go aggressive, they're still going to construct a portfolio not to lose money because they're interested to have fees, right? So, and to have you as a client for many, many years long, right? Or do you think they're just because fixed income is still one of the most bulletproof solutions, and that's why they don't understand fully the tech environment enough?
I think it's all of those things, and it's actually a very complicated equation. So the first part is access. Most financial institutions, most investors, most private banks don't have access to private investments made by the best investors. And so the investments that they have ready access to are public equities, fixed income, large cap real estate. And so that's what they offer you. And they offer it not just because they make money off it, but also because when they run their analysis, it seems to say you should invest there. The problem is the analysis is flawed because the data, as I said at the beginning, Constantin, the data on early stage tech and small cap real estate isn't captured in a systematic way. They're not efficient markets, and they're not open and accessible to investors easily, and data doesn't get collected. And so the optimum portfolio analysis these people are running are flawed. So they, even if they didn't want to make more money, and even if they weren't feeling constrained to offer you the products on their platforms, their own analysis would be saying that they are doing the right thing for you. The problem is their analysis is wrong because they don't have the data on the highest returning assets in the world. And just to put this into context, I mean, at the last 10 years, the superior returns of the stock market have been driven by a handful of public tech companies. And you can even go to the case of Berkshire Hathaway, Warren Buffett and Charlie Munger, amongst the best investors of our lifetimes, without question. But if you look at their most recent returns, which have not been that great, almost all of their return is driven by their Apple stock.
Yeah,
they have a very large position in Apple. And so even though Charlie Munger and Warren Buffett historically said they didn't like the nifty 50 sort of tech companies, the reality of the last decade has been the best way to invest would have been investing in tech. For most people, it would have been public tech. But actually, the private tech indices and VC returns are very high as well. So I think that for the point of all of that is if you're on this call, there's another piece. So I told you asked a very complicated question. The other part of it is we're only just beginning to understand this systematic reduction in the value of the denominator, which is the fiat currency, the dollar, the pound, the yen. And when we look at our investments and we think they're going up, they might actually be going down if the value of the sovereign currencies is diminishing. But we can't really get to grips with the value of the sovereign currencies because everything that we use to denominate value is the denominator per dollar, per yen. And the cross pairings don't mean very much if the tide's going out and if they're all going down. And I think there's been a lot written about that recently. But I think if you're an investor sitting at home and you're trying to create a balanced portfolio for the future, you need to have an allocation to private technology as well as public. And you need to have some exposure to new assets, including crypto assets like Bitcoin. And even if it's only a 1 or 2% allocation, my personal view is that that's just going to end up being proven to be part of the optimum portfolio. And I know people like Paul Tudor-Jones are saying so as well. But it's going to be 5 and 10 years before we have the data to really know. And so you can either be an early adopter, you can be a laggard. I think right now what we're seeing is the big middle of the adoption curve are now coming online. And I think that's driving up the value of many of these assets, at least the better ones. So,
no, thank you for this answer. Look, I'm sure if we're going to go deeper in this, like, you know, it's a conversation for several hours, and you being, you know, very well known, like in the space, and I would say just well positioned with enough data and experience, which I think that's a killer combination when you have data and experience to basically back up your thesis. It'll be great to probably consider a second interview, but for now, we're probably going to end up here. So again, we're going to share, for sure, we're going to share all the links to the books. We're going to share the link to your website where you can download the free version of the book, right? And generally, I hope that all your businesses will grow, that your great family, like your 5 kids and your amazing wife, you're going to continue to build this stronghold of yours on all levels, on family office and on personal family space. I wish you great success, Matthew, and thank you so much for this interview.
Thank you, and we love BitBull, and we hope that you see a lot of success at BitBull too. Thank you very much, Constantin.
Thank you.